Look, all the doomsday people here on YouTube and their little pussy finance channels, they're all saying we're in
Armageddon.
It's going to be the most massive market crash ever. Stock market's going to crash. Real estate market's going to crash.
2000 is going to look like nothing compared to this.
Well, all the data is saying otherwise. We're seeing actually the total opposite of a giant crash. Are we seeing a reverse market crash? I'll explain more right now. All right, so on this channel, we like to peel the onion and look at the economic data. That's all I do on this channel. So we can talk about doomsday stuff, of course, but on this channel, we always give solutions as well because, let's be real, I ain't no pussy finance YouTube boy. See, a lot of these YouTubers are following some of the big ones, some of the biggest ones that you know. They don't actually know how to run a business. They don't have employees. They haven't bought nearly as much real estate as you would imagine for the size of their channel. A lot of them only have bought like 5 or 10 properties, yet have millions and millions of subscribers. It doesn't mean they know what they're talking about when it comes to building a business. See, over here on this channel, The Fruitful Investor, I've bought and sold over 150 properties. I got 13 employees right now in my flip business, and I've raised over $60 million from total strangers who watch my videos and believe in me and invest in me. So I know a thing or two about investing and building a business because at the age of 35 right now, I can retire like 5 times over if I wanted to. Now, what's the real reason why I think we're about to see a reverse market crash? Well, if we look at the economic data, we are in a recession in Canada. That was just proven at the end of November when I was filming this video. And what's the playbook when we're in a recession? By the way, America is like 3 or 4 months behind as well from being in an economic recession. But what's the play in a recession? Well, the Federal Bank and the Bank of Canada have already said that once we're in an official recession and it's kind of confirmed and unemployment's going up, job losses are going up, etc., the next play is cutting rates. That's what we've been heading towards this whole time. We are experiencing what the federal banks have wanted. Pain, economic pain, slow down in economic activity, slow down in wage growth, slow down in inflation, uptick in unemployment to bring the job balance back in market because let's be real, employees were coming home to roost for the past couple of years. They were calling the shots.
I want this amount of money or I'm walking.
And employers were like,
Please don't leave. I need you. I can't find anybody to work.
now tables have turned, motherfucker. If you want to leave that door, there's 10 people right behind you. Honestly, the way it should be in a flourishing economy. See, the employer has to have control. They're running the business. They are calling the shots. It's like having a rental property and you're the landlord and the tenant, for some reason, calls all the shots. They can decide when to pay you rent or not to pay you rent. They can smash the property if they want to and get away with it. Oh, wait a second. This sounds a lot like Ontario. Anyway, you can't have that for a flourishing capitalistic society. So we're coming back to normal. We're not going to Armageddon. We're not going to shit we've never seen before. No, we're going back to normal. And with rates literally just months away from being cut, don't kid yourself. Tiff McClem, the game is over, bro, and you know it. Keep talking tough, but we always know that the government and the central bank will say one thing. They'll do political posturing to get their kind of way, but then their actions usually are always the opposite. For example, remember when he said rates are going to stay low for a long time, don't worry, in 2020? Like a year and a half later, here we are. Remember when he said inflation would be transitory, it'll go away quick, don't worry, we don't got to panic, it'll just kind of fix itself, and it didn't? Yeah, see, they say one thing and the other thing happens usually. So when they're saying we're going to hold rates higher for longer, real estate's going to crash higher for longer, okay?
The opposite is coming, baby.
And that's what we do here on this channel. Why we look at all the data. I could spend an hour talking about why rates are coming down, and I have in so many other videos, but long story short, commodities are coming down. Oil's coming down, gas is coming down, commodities are coming down, copper, aluminum, wheat, etc. All those things are coming down. Shipping times around the world are lickety split back to pre-pandemic levels. The very thing that caused inflation is totally fixed now, but it's lag data. It takes about 8 months to a year for today's stuff to appear in the economic data, in the GDP reports, but it's all fixed. The very cause of inflation, the supply constraints, all those things are fixed. All the commodities are coming down to normal, which is why we know inflation is going to roll over, which is why we know interest rate cuts are coming, which is how we know, by the way, real estate is going to go boom, boom to boom, boom, boom real soon. It's the playbook. We have so many buyers right now, have so much pent up demand. All the millennials are just on the sidelines frothing at the mouth, waiting to get into the real estate market. But with interest rates so high, the uncertainty of how long they're going to stay high, dude, the fucking second the bank cuts rates for the first time, it's going to be like zombies running through the fucking street looking for houses.
I like turtles.
So this spring, 2024, I believe is going to be a pretty good spring. Like normal, it's going to be a pretty good spring market. But the spring market of 2025, when the rates come down 200 to 300 basis points, as what's being predicted by top economists, by the way, that's 2 to 3% if you didn't know, it's going to be fucking madness. Spring 2025 real estate market is going to be 2020 real estate market all over again. So this idea of this real estate market crashing, Armageddon, we're never coming back. You just watch. You just watch. You're not in the industry, dude. You're not looking at live data. You're not looking at the listings on the computer like I've been showing you. You're not looking at all the turnovers. It's fucking building and building and building, and it's going to be crazy. So if interest rates stay high, which is what a lot of doomsday people want,
I want to see the housing market crash.
again, we always say, careful what you wish for, because high rates means economic pain. I mean, we're already in an official recession in Canada because the rates are so high. Everybody's so scared. They don't want to spend money. They don't want to buy things, which is leading to GDP growth being slow, which is how we're in a recession, is that nobody's buying things, nobody's producing. People are laying off people in fear of going under, so they're laying off their worst employees. Unemployment rate is going up. How much longer do you want this to go on for? I mean, if we hold rates any longer, you might be out of a job. See, you want real estate prices to come down because it's not really affecting you yet. But when you lose your job, you're going to be crying for those rates to come down. So again, careful what you wish for. Anyway, based on all of this that we're seeing in the market, that we're in a confirmed recession, GDP is negative, rates are high, wages are stagnant, unemployment is rising. This is why we're going to see a reverse market crash. And what does that basically mean? We're going to enter an economic recession. Well, we're already in one, and it's going to continue on for another year or two, but the real estate market is not going to be in a recession. And by the way, for everybody that thinks an economic recession always leads to a real estate recession, you are so wrong. It's not even funny, and I've showed this so many times on this channel. If we look at the data, an economic recession rarely coincides with a real estate recession at the exact same time. Don't believe me? What happened during all of the 80s of the high inflation? That was a rough economic time. The entire 80s with super high interest rates, 18% interest rates. Remember how the boomers always talk about 18% rates? What happened to real estate that entire fucking decade? It went up. It didn't explode. It didn't go crazy, but it did its thing. 2%, 3%, 4% appreciation, nice and boring. But what happened to the economy with the 18% rates? It was really rough, really hard. Then they cut the rates finally in the mid to late 80s, and then we had a bit of prosperity. But then in the early to mid 90s, we had another economic recession. What happened then? That was a really rough recession for the economy. High unemployment, no construction. It was a really rough time, the data tells us. But what happened to the real estate market in all of the 90s? It went up pretty well. Okay, cool. What happened in the dot-com bubble, 2000, 2001? That was a nasty stock market crash, pretty hard on the economy as well. Real estate, dude, it kept climbing really high. 2008, yes, that was a nasty one. Economic recession and real estate recession at the same time. However, that was really a targeted real estate recession because of all the fuckery that went on in America. But in Canada, I can tell you, 2008, 9, 10, 11, 12, nothing happened here to our economy and nothing happened to our real estate market. It continued to go up. Okay, cool. In the pandemic, shut down. Economy was pretty weird. Didn't know what was happening. What happened to the real estate market? You know what happened. It went fucking berserk. Then what happened last year with the interest rate hikes? Real estate in a lot of areas in Canada and America went down 15, 20, 25%. That was a real estate correction, a real estate recession. Now, all the data is pointing that we already had the real estate recession. The doomy, gloomy time, rear view mirror. You already missed it. You wanted to buy the house. You wanted to get that smoking. You just missed it. That was a year ago, bro. The economic recession is just starting and it's just about to come even worse. But what's down the road for real estate coming up? Blue skies. Why? Interest rates are going to be cut. Millennials are going to fucking go crazy and buy. How can prices go down when when interest rates drop, making it more affordable, more people come into the market, which means more bidding wars are going to happen, more fighting against each other because we have low supply, historically, disgustingly low supply. How is it possible for prices to come down under those circumstances? They ain't. And if you believe they are, you're listening to the wrong dinks on YouTube who I guarantee have never bought a rental property. They only probably own their own home, if that. They study real estate. They read about it in articles and in books, but they've never fucking done it in real life. They don't have employees. They don't understand how to read stock charts. They don't understand how to read data, monetary policy reports, GDP reports, the things that we do on this channel. They're not educated. They just talk nice and have a nice smile on YouTube. And you like their videos because they're entertaining, and they are. It's fantastic, but they don't know what they're talking about. Anyway, on this channel, we know what we're talking about. We talk about the data. We peel the onion. Anyway, let me know your comments below. What do you think is going to happen to the real estate market and the economic market? Let me know. I'll see you in the next video.